It's time now for The Close with our business editor, Ross Greenwood. It'll be staggering to most, but in just 9 years, 2 Australian entrepreneurs have created a business, if listed on the ASX, would be worth more than Rio Tinto, Ross, more than Telstra, more than Coles or Woolworths. Talk us through it.
It's a pretty big story, I've got to tell you. This is Canva. 2 people still in their 30s set this business up from scratch, was worth nothing at the time, is now said to be worth more than $40 billion US. This is them there, Cliff Obrecht and also Melanie Perkins, set this business up. The $40 billion US is worth around 55 billion Australian dollars. So they've done a briefing today, and the way in which they get to this is that they've sold to private equity businesses around 0.5% of the business for 200 million. So here's the way in which the ASX stacks up. So there's Fortescue at 54.8 billion Aussie dollars. Canva, not listed, is close to 55 billion, about the same as what Fortescue is. There's Woolworths, worth less, $50 billion technically. So you can sort of get the vision of how this goes. Now, they don't make a lot of money, but they do certainly, they say they're on track to maybe have $1 billion annualised revenue this year. Now, the interesting part about this is whether they want to go to the stock market to capitalise, because the 2 founders own around 30% of this business. Cliff Obrecht talked about this today at a briefing. Here's a little of what he had to say.
Yeah, so we don't have any plans to IPO on the immediate horizon. There's 2 key reasons, or maybe 3, why companies IPO. It's to raise money, and it's also for liquidity. We're able to achieve both of those things in the private markets at the moment. That allows us to maniacally focus on growing the business, and that's how we really deliver value to our shareholders and what delivers value to the company.
So if the company has no plans to list, why have they raised the 200 million US dollars today? Not long ago, they raised 17 million.
Yeah, I get a sense because they can, Kieran, because the markets are so awash with cash at the moment. People are looking for investment opportunities. Now, give you some idea of Canva. What it does, it basically does graphic design online. You can sign up there, free account. It's a bit like Photoshop, I kind of guess. It was the big one that people used, or some of those Illustrator. And because this is a free service, you can then get a better service where you pay, and they get a view that they're going to get a significant chunk of this, not just in Australia, but around the world, hence the massive valuation they've got on them. So, you know, this was all about the revenues and the growth. They say they've still got the money that they've raised, that they are making profits. So here's just a little of what their chief financial officer said today.
We continue to sort of double revenue year over year. We're currently on track, as we mentioned as well, to surpass $1 billion annualised revenue by the end of the year. And right now we're sitting at over 700 million annualised revenue, but as mentioned, on track to hit $1 billion by end of December.
It's a scoop right there.
So, Kieran, the interesting part about this is the founders are married, got married last year. They're worth about $16.5 billion. They also committed today that they want to give most of their wealth away. In other words, eventually when they float it, when they sell it, they'll get this large amount of money. But then they say they're absolutely committed to start giving it away. And even the company now is giving a part of its revenues away as well.
Wow, not your typical billionaire then. No. What did you make of the Treasurer this morning on Sky News, Ross, on another matter, hinting there could be a review into the Reserve Bank?
In my opinion, it's high time there's a review of our central bank. There hasn't been one since 1981. I think it's time that really you did stop and adjust and look at the function of the Reserve Bank. Remember, one of the criticisms of the Reserve Bank is that its 2 to 3% inflation target has not been hit for more than 5 years. And it's constantly underpredicted the impact of, say, inflation, range of other things as well in our economy, even economic growth. Now, one of the points about this is in a parliamentary inquiry in August this year, it was actually Andrew Leigh, the Labor member, who actually raised this concept of a review with the Governor of the Reserve Bank, Philip Lowe. Here is the response of Philip Lowe from early August, just only a month or so ago.
So when people say there should be a review of the Reserve Bank, I'm not sure what they're calling for, kind of a review of the legislation, our mandates, the way the government appoints people to the board, the type of people they put to the board, and kind of how we've done our job. We haven't done our job effectively. So all those things get conflated. What I'm responsible for is how we do our job and the monetary policy regime that we employ. And I would observe that these various reviews that have been done by other central banks have all come to the conclusion that flexible inflation targeting is the best monetary policy regime we can have at the moment.
Yeah, interesting to note here, Kieran, there have been reviews of most of the central banks around the world. Ours, however, continues, as you can hear there, to be resistant to the concept of actually reviewing what the hell it does.